This is Nick Radge, manager of the Harbourside Multi-Strategy program. If you're new to listening into these monthly reports, just to let you know, this program is a genuine active strategy and it's founded on a consistent, disciplined and a proven investment approach using momentum. What we do is we look at the market from a top-down quantitative perspective and we selectively invest in high growth stocks in both the Australian and the US markets. Now, whilst this is a long-only approach, the strategy does have the mandate to revert 100% cash during sustained downwards environments, and this mechanism controls our downside exposure, which in turn attempts to increase the long-term risk-adjusted return profile. So having a look at the month of May, the portfolio closed up 3.3% compared to the benchmark, in this case the Russell 1000 Total Return Index, which returned 4.7%. Year to date, we're up 17.86% versus the benchmark 10.51%. And since inception, we've returned 278.74% versus the Russell 1000 of 162.5%. For the key highlights in May, US markets bounced back after the April decline, which was great to see. In fact, it's the best May performance for 15 years in the US market. Unfortunately, the Australian market is again struggling. We spent about 2 years in a sideways range, which really handicapped this portfolio. We'll take a look at that very, very shortly. And again, during the months of April and May, we're basically gone sideways again. The good news with the All Ords, or with the Australian market, we are on the upper side of that range, and in theory we should return to the all-time highs, but it looks like that's going to take a little bit longer than expected. As a result, the US side of the portfolio is doing all the heavy lifting, and we only allocate 50% of our portfolio to that. So all in all, the 3.3% return is actually a pretty good result based on only 50% allocation to that. We will remain fully invested going through June. Now, if we have a look at our hypothetical performance over the extended long period of time, you can see there are periods of time where the Australian market does both outperform, such as during this period here, and it does underperform, which is this period here. In more recent times, you can see more or less we've gone sideways, and the US has started to kick up nice and high for us right there. So all in all, I'm pretty happy, considering really we're only running on half the engine at the moment. So I look forward to seeing what will occur once this portfolio gets going on both engines. Anyway, it is what it is, and we'll just keep rolling with it. If you have any questions about this portfolio, feel free to give me a call or drop me an email. My email address is nick@thechartist.com.au, and I thank you for your attention.